So it is November, and that means, drum roll please.
It is Financial Literacy Month.
Where'd you come up with Financial Literacy Month for November? Why is that?
Well, I didn't come up with it. I didn't come up with it.
No, I'm trying to give you props. People don't know that you didn't come up with it.
I know. So Financial Literacy Month has been going on for years now, and the Financial Consumer Agency of Canada is the one who picked November as a date to really focus on financial literacy.
Yeah.
And, I think really now in 2022, talking about financial literacy is more important now than it has been even in the past. I think through the pandemic, a lot of consumers were in pretty good shape financially, Todd.
Mm-hmm.
Maybe people weren't spending as much. Maybe they weren't borrowing as much. Maybe, they weren't eating out and traveling and all these things.
Right.
But I think now that the economy is opened up, things certainly have taken a turn.
Yeah.
As we know with inflation has really been at all-time highs. We're seeing some good signs that inflation is starting to soften. Obviously, some of the impact that the Bank of Canada has had is now impacting the end consumer. But the cost of groceries, the cost of fuel, and really the cost of mortgage interest rates really have taken a toll on many households.
Mm-hmm.
And I think just being financially aware and focusing on Financial Literacy Month this November, I think will pay you dividends going into the holidays and really into 2023. I think 2023 and really the rest of this year is going to be really about tightening the belts.
Mm-hmm.
And I think it's going to be about focusing on needs versus wants. And I know we've touched on this, but I think it's going to be even more important now, especially with going into a more challenging, time economically for this country and really for many countries across the globe. Everybody's suffering from the similar type of issues with inflation.
Yeah, and I think everybody we live in the here and now, and we don't understand, or not that we don't understand, we forget that these things are all cyclical. It's not like this has never happened before.
Mm-hmm.
We've had these patterns before. We've had, I don't want to say boom bust necessarily, but we've had times of plenty. There's times of not plenty. There's
Definitely.
times of in which people need to react to what's going on around them. And I think it's important but to all of this, I think that programs like what we're doing and what is available online and the media often gets railed, social media in particular, as being a negative impact in people's lives, but I think it can be a positive impact in people's lives.
I agree.
Because people are now hopefully educating themselves to go through these ebbs and flows of what's happening in this cycle, right?
And you know what? I think if anybody who has lived through any of these past, economic challenges, this is not the first time that I can remember where we've had to, maybe financially tighten our belts. And this isn't the first time that we've been in a situation where we've had a higher inflation.
Mm-hmm.
And it's not the first time that we've even seen mortgage rates that are where they're at right now. I started 17 years ago, Todd.
Yep.
I remember what it was like in the early 2000s and mid 2000s, and the rates were higher then than they are now.
Mm-hmm.
And, I think we're suffering a little bit of shock just at how quickly things can change with inflation, with, mortgage rates and these things. But we need to remember that we're not, in a situation where the rates are just went up overnight.
Yeah.
The rates certainly have been, increasing. And I think obviously the Bank of Canada has put out a clear message that they will continue to increase the rates to bring inflation in line if that's what needs to happen. Many economists think that we're nearly at the top of what things look like. Benjamin Tall, I was doing a talk when we were in Vancouver a few weeks ago, and we mentioned that, he thinks that we're probably another maybe 50 basis points to the ceiling. Again, economists aren't experts at, knowing exactly what's going to go on.
Well,
and economists are
they're experts, but they're not prophets.
They're not prophets. I think experts at reading the data, but the data changes so quickly, Todd. So it's hard for even an economist to know what's going to go on in, a month, 2 months, 3 months down the road.
Okay, well, let me ask you this, okay? I want to interject a little bit here. We've got a lot of young people, and it's great that we've got a lot of young people in Nova Scotia and of course in Ottawa, young people who bought houses over the last decade, graduated, and times have been pretty good since 2008. I mean, let's face it, after the 2008 thing, things have been pretty darn good. So for a lot of those people, they graduated, they went to school, they bought their homes, it was pretty good times. Happy times are here again. And unless you've lived something, you hear about it in history books, but until you go through it. So Do you think for some of those people that this is a wake up call for a lot of these people who have not had to go through these types of changes?
I think it's certainly a wake up call.
Yeah.
And I think some people have not had the wake up call yet.
Right.
I think that there's some consumers, and we talked about it before we started our show. We were just talking a little bit. There's some consumers that are in a low fixed rate mortgage product that they had from 4 years ago, 3 years ago, 2 years ago. That's going to be coming up for renewal. And some of these consumers are renewing into mortgage rates that are double and triple what they had.
Wow.
Which certainly can have an immediate impact.
Yep.
And, certainly a lot of consumers that are in a variable, they're feeling the pain, Todd.
Yeah.
I'm in a variable, but the one thing that we need to remember is with a variable, currently it's high, but it's going to go down. The thing is with a fixed rate, it almost provides some type of false security in a way. And I have clients that are in a fixed rate that, they think that their term is never going to end, but there's a finite amount of time. Certainly the risk tolerance, I think, is changing for people. And obviously the fixed rates right now are very, very high compared to where they have been. Mm-hmm. At a fixed rate, we're talking like mid 5% range right now. Yeah. And that's not historically high. That's probably somewhere around, obviously it's still higher, but it's more around maybe what the median mark looks like. But, a lot of economists are projecting, again, they are not prophets, they don't know, but they think that we're going to be in a recession type situation by the end of next year. Mm-hmm. So really the pain that a lot of customers are going to see and consumers are going to see, the pain's going to happen for the next 12, 14, 16, 18 months.
Right.
But how can you get through that, Todd? How can you make sure that you're protected financially? And how can you make sure that you're making the best decisions for yourself and for your household, over this next period of time, which can be and will be challenging for many people.
Yeah. Okay. So how do they, what's some of the advice that you give?
We've touched on, needs versus wants. I think really keeping your unsecured debt under control, I think that's a huge one. For the consumers that do have, a lot of unsecured debt now, focus on paying that down. Make those payments now while you can, because consumer goods may still become more expensive. Right now, as we know, inflation's almost 7%. Mm-hmm. So every month that goes by, technically things will get more and more expensive. So I would definitely focus on, only spending money when you need to spend. And if it is more of a want, make sure that's more planned out and, thoughtful.
Yeah.
I think sometimes, we're in such an instant gratification culture.
Yes.
We want it, we buy it. But there certainly can be implications, obviously, down the road. We're talking things like borrowing costs. We have a lot of consumers that do not use credit cards the way they're supposed to be used. The whole idea about a credit card is that you're not supposed to pay interest. You're supposed to use it, and then you're supposed to pay it. And, it certainly is credit that's available from your bank or financial institution that's providing you this card, but you're not supposed to carry a balance on the credit card.
Right.
And I think that's really something that the culture has shifted, and we certainly do have a lot of consumer debt in Canada.
Yeah, well, heading into Christmas as well, which is not a good scenario for a lot of people.
No, and I think sometimes people always want to give a Christmas, to their family.
Yeah.
Whether they have kids or whether they have a spouse or whatever their situation is. I think this year it's going to be maybe more about experiences versus material things, and that's okay. I think now November is a great time to have these conversations really at the dinner table. Yeah. I know some of this is taboo, but have the conversations, and I think that's going to pay you dividends going into the new year.